Welcome everyone this afternoon for another webinar here. We ran a session yesterday. I think a lot of you have joined us for the second time today. Yesterday we focused entirely on the self-employed measures that were rolled out last week, and spent a lot of good Q&A dealing with some of the very specific questions relating to that measure. So for those of you who are self-employed or think you can access that, I highly recommend getting hold of that recording. I think we've already circulated that once, but we'll continue to circulate all the recordings to our webinars after this has finished. Now, today we're going to go on through a whistle-stop tour through looking at all the measures that we think are applicable to small business at the moment. So the idea is to give you here a sort of 10,000, 20,000 feet view of what's out there, and without getting too lost in the detail as we go through. Okay, but there's a lot of obviously content to cover as we go through. Rosie will pick out questions through me that are very relevant and very pertinent to that point of the presentation where we're at there, if needed, but we'll try and keep as much of the questions to the end as possible to give us enough time to rattle through all of this. Okay. So just a high-level view of what we'll cover. So we're going to look at the job retention scheme. A lot of businesses, this is probably 80% of the questions coming in from our client base at the moment is around these furloughed employees and getting the grant from the government to cover those. So we'll look at that first. We'll touch again on the self-employed scheme, the self-employed mirror of the job retention scheme. We'll look at the 10 and the 25k cash grant, the business loans that are being guaranteed by the bank, the business rates tax holidays that for the hospitality, leisure, retail sector, and then the two formal tax deferrals that were being offered by the government at the moment. We'll finish off with just touching on the, well, what if these don't apply to me? Well, let's just look quickly at universal credit, etc., of how we can get access to those. Right, so let's kick off then with the big one, the coronavirus job retention scheme. So this scheme is a grant. So first of all, we've had lots of questions. Is this a loan? Is this to be paid for? It's not. This is a grant. And it's a grant that's going to be valued at 80% of your employees, your furloughed employees' normal salary, with a cap of £2,500 a month. Okay, and this applies only to those employees that you furloughed. So you've requested to be temporarily absent from work, and we'll dig a bit into more of that definition in a few moments. To qualify for this, you must be a UK business. So this has been rolled out to touch multi-billion-pound enterprises and small two-man bands in the UK. So likely everyone this call qualifies for this to some degree. So self-employed, LLPs, limited companies, you should all qualify for this. Now it's very important that the employees that it does apply to are these furloughed employees. We've also had a number of questions from businesses who recently made a number of hires just prior to the crisis really taking bite here. In the government legislation, in the wording that's being released at the moment, this scheme won't be available for those new employees. The employee must have been employed in your business prior to the 28th of February. Now, I'm not sure whether that means they must have received a PAYE payment then. Perhaps one of my colleagues can check this in the background, please. But they must have been at least employed in the business prior to that date. Now, what do we know about how you access it? So the scheme is going to be administered by HMRC. HMRC are busy developing a portal, so an online portal, which you'll access, and I'm sure will end up helping a lot of you access this portal. Now, our expectation is that this should become available possibly in the next few days. We're hearing that payments, the first payment should come through by end of April. So I think to get and process those claims, we'd expect to see the portal pretty soon. Now, on this portal, you're going to have to provide information about the qualifying employees, but what will likely happen is that the portal will do all the calculations itself in terms of what then is going to be granted to you. Now, the scheme is going to be, at the moment, ran for 3 months, backdated to the 1st of March. So all wages that you've paid out perhaps already that covering March will be covered by this scheme, and it will roll for 3 months. Now, I think our expectation is that for as long as the government have policy legislation in place that are limiting, or that is limiting the ability for UK business to operate, indeed close if you're on in the retail sector, I think we'll see this scheme roll on. But my advice is let's not count on that. Let's make other plans beyond the 3 months, but that could happen. What new information? Actually, before we look at new information, Ravi, what are you seeing from your current client base at the moment in terms of the questions that are being raised around furloughing employees and how businesses are approaching this?
So I think there's a couple of key things to think about here. The first is, one of the interesting conversations we've been having is what level of staff do we need to maintain in order to keep processing output out of the business? So, if you're a manufacturing business, what's the minimum level of staff we would need to keep the production floor running? If you're a consultancy firm, what's the minimum level of consultants you'd need to keep making sure that we can deliver on projects that we've promised? And once we've got an idea of that, because actually through this time, there is the opportunity to keep delivering on our promises to our end customers. So it's then understanding, okay, well, how do we, what does that mean for the rest of the workforce? And like you said, John, on the previous slide, in terms of timings, one of the things that we are doing is saying, okay, well, we appreciate that the government's working quite hard and fast at the moment on getting the system in place. But as a worst case scenario from a cash management perspective, we're planning for that money to be coming in, I'd say, first week of May towards the second week of May as a worst case scenario. So that kind of it really lets us understand what kind of headroom we have leading into that.
Excellent. So I think two really key points there is, one, be in your cash management, so in your cash flow, be conservative when you think that grant's going to come in. With our clients, we're saying let's assume it's May and make plans to make sure we can fill April. And secondly, you must do your calculations. So it's not necessarily the right thing for all businesses just to suddenly furlough your workforce. Exactly. You need to understand, is it better to have some still producing or all still producing, and is that a better economic output for the business at the moment? Thanks for the insight, Ravi. Now, so just some new information that we're picking up over the last few days. So the first one, really important point here. So in addition to the 80% cover capped at 2.5K, the government are also going to pay to you, the employer, the NIC contribution that you would usually make on, or you will be making on top of your salary payments. And they're also going to extend this to cover the employer, or at least the statutory level, the employer pension contributions. Okay, but only at the statutory level. So if you submit, if you contribute more as employer, those won't be covered. But so you will be getting more than the 2.5 grand each month. It's also clear coming through various different channels that you don't necessarily have to top up the wage from 80% to 100% of what they would usually receive, and the government have put that in their documents they're putting out. However, I must underline that this is still employment law, HR dependent. You can't just not pay your staff what you're contractually obliged to pay them. You must go through a process of agreeing a lower salary level if you're going to do that, and you must be seeking the right advice when you do that. A few things is that the minimum period you could furlough someone is 3 weeks, so it's not just a week on, week off thing. It has to be at least semi-permanent. Well, it will be semi-permanent anyway, but 3 weeks is the minimum. And a really big one here, which we'll keep touching on, keep coming back to, as we get lots of questions on this. Can directors make themselves furloughed? So the answer is, from what we're seeing from non-government source of channels, from civil servants and the media and the like, is that yes, you can be furloughed. You can still undertake your statutory obligations as a director, ensuring accounts are filed, taxes paid where applicable, the company remains solvent, but you can't continue your normal day-to-day business operations. So you can't continue business development or working with clients directly. Okay, so directors can make themselves furloughed. So just drilling a bit more into that here. So directors can make themselves furloughed. The part of your earnings, though, to remember, is a small business owner. that can be furloughed is the PAYE element of it. So we know that a lot of director owners have a tax efficient mix of remuneration, mostly made up of a dividend and a small salary, often £6,000 to £10,000. It is only that salary part, the £6,000 to £10,000, that will be covered by the scheme. Dividends fall outside of any sort of government support that you receive at the moment. So that part of your remuneration, as you might see it yourself, is not covered. Employees on variable pay. So those employees that earn a commission, so perhaps they're in an estate agency type setting or they work in a sales team, and those employees on variable pay contracts, such as 0-hour contracts or shift work type piece. So the government has said, yeah, we are going to cover you as long as you're on a PAYE scheme. We will look after you. And what we do in this case is you look at that employee's historic pay over a 12-month period, and you choose either then to take the higher of what we paid them in March or April next year, or what the average earnings of that employee was throughout the period. And that is the number that we can apply this 80% cover to that the government are offering underneath this scheme. Now, if the employee has worked in the business for less than 12 months, we just look at the months that we can and average over that period. Okay, so this is quite important for those of you that operate sales teams or indeed operate shift workers, perhaps in a cafe or a pub or something like that. Okay, so the mirror of this scheme, the self-employment income support, which we covered in quite a lot of detail yesterday as well. So much like the employed scheme, this is a cash grant worth 80%, but instead of salaries, it's normal profit, again capped at £2,500 a month and available for 3 months. So just to clarify that this is profit, this is not income. So this is where a lot of people are mixing things up. So as a self-employed person, you run a profit and loss statement, and you've got your income, so the fees you charge your client, or the invoicing you do with your client base. You've then got expenses in your business, professional costs, travel costs, all that stuff. And then you have a number at the end of which you pay tax on your profit number. And this is the number that the government will be looking at to apply this 80% calculation to. Okay, so not revenue, but profit. How do you qualify? So number one, you must be self-employed, and this does include those who are members of an LLP or partnership. This is technically still self-employment. We're not sure how we're going to show this or prove this, but you must have lost profits due to the crisis. Very important that you must have filed a tax return for your 18 and 19 tax year. Now remember, this is normally filed by Jan 31st, and you've paid your tax by Jan 31st this year, but the government recognises not everyone's able to do that for whatever reason. Some people are filing late, so to help with that, they've extended this amnesty up until the 23rd of April to file your tax return without penalties, without fines, but to be part of the scheme, you must have filed it by the 23rd. So if you haven't done that, do that today. Talk to your client manager or partner to help get that organised. Right, so you must be currently trading, so you didn't just stop trading middle of last year and now are looking back to see if you can claim on the scheme. Very importantly, you must not have trading profits of more than 50,000, so it must be less than 50,000. So this is includes £50,001. Okay, so the scheme is designed by the government to target those who need it most, and government data suggests that only 5 to 10% of the self-employed workforce actually have profits more than £50,000, and those people have average profits of around £200,000. They're not trying to target that group. Okay, and you must have had self-employed income that totals more than half of your income. So what we mean there is, if you're perhaps an employee in a business and have a side gig, perhaps you work in a construction business during the week, you're employed, and then on the weekend you undertake your own work, you can only claim for that self-employed income under this scheme if it totals more than half of your total earnings. So how do we access this? So again, HMRC are running this scheme, and they've said that we're going to be using your self-assessment data to check eligibility and to apply calculations. Okay, because they're heavily focused on the employed scheme at the moment, because that impacts most of the population in the UK. Their statement is we probably won't have this particular scheme and portal available until June this year. It may become earlier, but at the moment expect that it's going to be June. And at that point, they will backdate all the payment to the 1st of March, giving you a lump sum, which I think will then be a maximum of £7,500, depending on your calculation at that point. So the message at the moment is there's nothing you can do right now, but you must ensure that your self-assessment has been filed for the 18-19 tax year. Okay, again, we had lots of questions yesterday about I'm a director of a limited company. I feel like I'm self-employed. Can I claim under this scheme? Okay, so the answer then is it's unlikely that as a director of a limited company, you'll be making self-employed income as well. So the director of a limited company, you're normally remunerated, as I mentioned earlier, via PAYE and dividends. So you will not qualify for the self-employed scheme. You'd have to look then at the furlough option. Or indeed other things that we'll talk about now. But remember that the dividends that you receive in your sort of remuneration package as you run your small limited company, even if you're the only person in it, so perhaps you use it as a contracting entity, dividends do not count as self-employed earnings in this case. Okay. What if I've not been trading, not self-employed for 3 years? That's fine. The government will just look at the years that you do have trading. But if you have only just, perhaps in the last month, become self-employed, so you've not been part of the 18-19 year, it looks like at the moment that you won't be allowed to be part of this scheme. That may change if there's a lot of pressure on the government, a lot of requirements to fill that gap, but at the moment it doesn't look like it. What if my average trading profits are above 51,000? So just to clarify on this point is that the hurdle is going to be set like this. Now, if your average over 3 years was indeed above 51,000, so perhaps you had a £200,000 year, £200,000 year, and then a £25,000 year, what you're allowed to do is look at the last year, so 18, 19, and that period there, and check, was that below 51 or 50,000? If it was, you will be allowed into the scheme despite having average profits above 50,000. And the converse is also true. So if you had a year where you earned 25,000, 25,000, and then perhaps 60,000, we'd look at the average of that period. If that's below 50,000, then you'll also qualify for the scheme. Okay. We'll cover that off. Cash grants. So cash grants is another a big area where we've had a lot of requests in about information, where there has to recently been very little information on. So let's just cover off these quickly. So there's 2 levels of cash grant available. There's a 10K level and a 25K levels, and these being targeted at small businesses and predominantly those on the high street and retail, leisure, etc. The 10K grants, there's 2 ways that you can qualify for this. So first of all, if you are any sort of business, so no matter what your trade, that you receive the small business rates relief or the rural rates relief, then you will qualify for the 10K grant. However, if you are retail, leisure, hospitality, etc., and you don't have that, as long as your rateable value is below 15,000, you will also get access to the 10K level. The 25K grant is reserved solely for those cafes, pubs, hospitalities, hotel, etc. So it's those businesses only with a rateable value between 15 and 51,000 at the moment. Now, Ravi, I know that you've been talking to a lot of clients about this again. What are we hearing from local councils, and what should we be doing from a cash expectation point of view?
So I think there's I think at the start of this, when it was first announced, there was the expectation that, don't worry, the council will reach out to you. What we are seeing in the last few days is that some councils are saying, well, actually, you can apply to us, depending on where you fall, and you can either apply online or by writing to them. And that'll be dependent, we've seen that to vary dependent on your local council. Mm-hmm. In terms of how we're managing it from a cash perspective. It's similar to what we talked about with the furloughing of workers, in that whilst obviously the local councils are working quite hard to deliver this quickly, we're not expecting, from a cash manager's perspective, we're not expecting this money to land, I would say, until at least the end of April, possibly beginning of May. And as we've talked about a few times, really underestimating how long it will take to achieve these grants and have them come into the bank is going to be really important.
Okay, great. So it's your local authority that will be delivering this. We're seeing some information come out from them, but I think the Ravi's point's really clear, just as with anything coming from grant-wise from the government at the moment, is assume the worst case in your cash flow planning and hope for the best. So make plans to be able to fill the gap until end of April, May time to receive the grant if you're eligible. So I'd recommend go and look at your local authority's website. If you haven't received a letter so far from them, have a look at the website and have a look at how their application process is working. Now, one of the interesting things that popped up, because the first time we reviewed this with all of you on a webinar some weeks back, we said that estate agents, amongst other things, were not going to be eligible for these grants. Now, some local authorities now are coming out and clarifying that they will be paying out to estate agents, which covers a good few number in our client base here, which is great news, as estate agents clearly make up a lot of the retail-esque high street space, and they are definitely impacted by this crisis. Just a side note as well, we've seen a number of authorities put out extra criteria, and the one that stood out to us is that they won't be distributing grants to businesses where they received more than £800,000 state aid in the last 3 years. Now, state aid in this context are those things like R&D tax credits, investment that you've received into the business that has had an EIS or SCIS grant, a credit attached to it. Various grants as well will fall within this, patent box and things like that. So you will need to check that to see if you qualify for the grant. Okay, so moving on now to what I think is probably the biggest and most far-reaching scheme, which is the business interruption loan scheme. So this is the government's initiative where you could access up to £5 million of debt funding, where the government are going to sit behind the bank and guarantee 80% of this. Okay, in a effort to get the banks to say yes on loans where otherwise they would say no under normal criteria. These loans are also going to be interest-free for 12 months. The government are going to pay all of the interest, so it's not even rolled up interest to pay later. The government will be covering the interest on these loans for a 12-month period, which is a big win for small business that are nervous about taking on a debt burden and the impact that will have on the P&L in their business. So some qualification criteria. So you must be a UK business, which again, I think covers most people here. You must be an SME, so a small business, so under 45 million turnover. The borrowing proposal must be only approved by the lender where the underlying business has suffered due to the COVID-19 pandemic, and which enabling the debt or the loan facility will enable you to trade out of the current difficulty. Okay, so it's not available for those businesses that are doing fine and well. You must be able to show that you have got a problem, that you have got a dip, and that you can come out the other side. Now, another important point here, because we do work with a lot of property developers and investors, is that the loans, again, are only available for businesses where more than 50% of your turnover is from a trading activity. Now, this particular point means that most property investors are likely to not qualify for this. However, from a tax perspective, some property development, if you are a developer that builds, say, residential homes, sells them, builds and sells them, and you hold built property as stock and don't rent it out, then you're treated as a trading business, not an investment business. So there may be some scope there to do something, but so far we suspect it's unlikely that you're going to, as a property developer or a buy-to-let investor, get access to these sorts of loans. How does this scheme work? How do I access it? So we know we've got this big organisation called the British Business Bank that are organising and managing this affair. And in fact, if you go to their website, there's some excellent information about how this works. They've got a very well laid out sort of FAQs and stuff there. But they'll be dispersing the cash via these accredited lenders, of which there are around 40 at the moment. And I think we're hearing there are plans to keep adding people to that to now enable more these loans to be dispersed. Right. Now, on that list include the HSBCs, NatWest, RBS, etc. So all the big banks that most of you are probably dealing with are on that, including some specialist lenders like Hitachi Finance and the rest that can cover asset finance, things like that. Yeah, it's worth mentioning that these loans are not just term loans; they're overdrafts, asset finance, invoice finance. And I think that's it, isn't it, Ravi? Term loans, asset over, great. So who isn't included, however, is the Co-op Bank. We seem to get a question on every one of these calls, Sam. Speaking to the Co-op Bank, they don't seem very helpful. They can't seem to lend me any money. They're not currently on that list of accredited lenders. So you will need to potentially approach another bank, and you will need to potentially open up a current account with a new bank to access their loan facilities. These loans are available now, so we're currently working with some businesses to help them make these applications, particularly where the applications are quite large, so hundreds of thousands of pounds. But what you can do today is at least talk to your lender. At the moment, we seem to think that NatWest are doing the most. At the moment, they seem to be the most helpful. The information they've got available is very helpful, and they do a minimum loan of £5,000, where I think we're seeing a lot of banks saying that their minimum is 25,000. So if you're a very small business, only need a small amount of money, maybe a small overdraft to see through, NatWest seem to be the most useful. Now, before we just plug in some of this new information FAQs, Ravi, what are you seeing happening on some of these applications you're making, and what's that process looking like?
Sure. So, like I said, John, the funding through the interruption loan scheme actually fits a couple of different molds. So you've got, like I said, your term loans, your overdrafts, your asset finance, your invoice finance, and that's really important, because one of the key things you have to answer, or we're finding that the lenders are asking us, is what type of finance do you need? Now, interestingly, most businesses, as part of the cash management webinar we had last week, would be able to start to answer that, because what the lenders are saying, so for example, Lloyd, they're saying, well, talk to us about how much money you need, talk to us about how your business model works, then we'll determine together with you whether that comes in the form of an overdraft extension or an invoice discounting facility, or even asset finance, or possibly a term loan. Now, you're right, one of the things we are seeing is that in terms of outreach, NatWest have been the most proactive. So we're actively getting on those businesses that we're working with. We're actively seeing our NatWest relationship manager reach out to us. On Lloyds and Barclays, a little bit less so. But the key commonality across all the lenders is a measure twice, cut once approach, which means here's our application form, here's all the information we need, get all of the information to us, which I'll run through in a moment, and then let's start conversations. It's very natural in times like this to give partial information and try and hammer through a decision. But even though it might not feel like it at the offset, getting all the information together and getting it right is going to be quicker for you over the period.
That's great.
So in terms of the information they're asking for, it follows effectively three key areas, and John, you touched on these before. So you've got your business narrative, which talks about, hey, who are we, what do we do, who are the management team? In this section, we're being asked to talk about, okay, how have we been affected? What has COVID-19 done to the business? And quite importantly, what we're being asked is what measures have we taken as a business during this period? How have we approached furloughing staff? If we were an events business, for example, a physical events business, for example, have we pivoted to doing some more virtual digital events? What are all the things? Are we approaching our councils for grants? What are all the things no matter how big or small, what are they, and what are we doing? Then they're asking for financial information. Now, what we're finding is that obviously the more financial information you can provide, the better. Obviously, what we want to be really clear about is that the financial information follows and matches the narrative we're talking about. So in terms of the amount of money, in terms of when you need the money. And what we're also finding is that if you're getting to the level of, let's say, needing £250,000 or above, you're needing to provide P&L, balance sheet, and cash flow forecast for the following 12 months. So if, for example, you're looking for less than that, you might need your typical last 3 years filed accounts, 6 months bank statements, and VAT returns. You're also being asked for management accounts, but any financial forecasting you can provide on top of that would be useful for those up to that level. But above 250,000, you've got to go in with it. Exactly.
Great, that's good. And some of you have seen that we did distribute a cash flow forecasting tool last week, and Ravi alluded to that we did a webinar just looking at cash management strategies. So the recording for that webinar is available. We'll make sure the link to that tool is included on the circulated email after this as well. And that, those of you that still want to talk about cash flow forecasting bits, if we get enough requests in, we'll run another webinar covering that. Okay, so just some key information here that we've had in around these loans through the loan scheme. So first of all, there was a lot of hype in the media that the banks were asking for personal guarantees for a lot of these loans. Now, it's worth mentioning again is that these banks are still writing commercial loans. Okay, so the government backing is to try and get the no's to become yeses, as you say, but the companies are still being assessed on their ability to be able to take on the debt. Forecasts and P&Ls will back that up, and they're being asked for the normal security. So personal guarantees are normally par for the course on unsecured debt, but the media put a lot of pressure on the banks, and it looks like now at least the big four, HSBC, Barclays, NatWest, RBS, have now removed PGs for all loans below 250, which is unprecedented from my point of view. Now, above 250, remember, you're still going to get assessed on whether you can actually provide the normal collateral required for a loan. If you can, then you actually won't qualify for the scheme. So if you've got a lot of property on your balance sheet or a very large debtor book or something like this, you don't necessarily qualify for the government-backed scheme. Okay, what's also interesting is that a lot of the banks are offering a capital repayment holidays at the beginning of these loans. So not just are they going to be interest free, is you may get sort of a period 3 to 6 months where you don't actually have to pay down the debt. Okay, so that's a great cash flow win for a lot of businesses. Right, so some FAQs that'd be useful for us. So let's just take the minimum one first. So we mentioned that we see a lot of banks doing the minimum of 25k. We know that NatWest does 5k out there. So NatWest looks like they might be a bit of a winner here if there's lots of people that only need a small top up. Now, if your bank don't offer your scheme, then you're going to need to have to look out beyond where you normally bank. Now, this doesn't necessarily mean go to a new clearing bank. So if you're with the Co-op bank, it doesn't necessarily mean you need to switch to NatWest Bank, but you might need to look to a lender like something like Hitachi Finance that do a lot of asset and invoice financing type stuff outside, which you can have run alongside your normal banking facility. Okay, it's interesting. So my bank will only offer me normal credit terms. Why am I not eligible? So I've mentioned this before, that if you are a company that is doing okay, a cash flow is fine. In fact, actually, you're not impacted by the crisis at all. And indeed, if you've got a good security that you can offer the bank, then the bank are not going to qualify you into the scheme. So if you think, how this protection is working, this is an initiative by the government to protect vulnerable businesses. It is not an initiative to support those that are actually continuing to thrive or stay in the game. Okay, so that's our loan schemes. The business rates holiday, very straightforward as compared to the others. If you are in retail, hospitality and leisure, so pubs, cafes, etc., you will not have to pay your business rates tax for a year. Now, there is nothing you need to do here. We're being told this will just be automatically flow through to the bill that you will receive, or the lack of a bill. If you're not seeing this come through and you think you're eligible, make sure you do get in contact with your local government and to see why that might be happening. The next one, tax deferrals. So there are two formalized tax deferrals that you can do here. So the VAT one is probably the most far-reaching. So if you are a VAT registered business, a business that submits a VAT return on a quarterly or a monthly basis, the VAT payment or payments if you're monthly that you will be due to make over this next quarter months, March, April, May months, then you get to defer your VAT payment until 2021. So you get a year to save up to pay that. Now, it's worth emphasizing here, as we're getting a lot of questions coming in, say, hey, do I just never have to pay this again? Is this just being removed from my account of HMRC? The answer is no, it is a deferral. So you still must make provisions going forward to make that eventually. And our recommendation is, if you don't need to take this and you have got good visibility for the next 6 months, and you probably should just keep up your VAT payments. But this is a good measure for those businesses with a lot of uncertainty about what's going to happen over the next 3-4 months. It's a good way of keeping cash in the business. For those of you, particularly who are self-employed or just business owners that submit a tax return each year, your self-assessment payment due in July 31st this year, remember, which is your on-account payment for the current tax year, that's going to be deferred until January 31st. So it's just going to be paid along with all the rest of your tax in Jan 31st, which will mean that in Jan 31st, 2021, you will pay more than you'd usually be used to, but this is just because you would have already contributed to some of it in July this year. So across all of those measures, the government's going to reach most people out there, but undoubtedly people will slip through the net. We pointed out a few today, how you might not qualify as a self-employed individual. Directors of small contracting limited entities, I think, are going to be particularly left out here, as dividends are not treated as remuneration in this case. So what other supports are going to be available? So you've got this statutory sick pay rebate. This is a very small one, but SMEs are able to claim statutory sick pay back from the government. Indeed, I think self-employed people as well are able to claim statutory sick pay. HMRC are being very relaxed around their time to pay offers. So time to pay is effectively an arrangement scheme by HMRC that if you cannot pay a tax liability on time, you can negotiate with HMRC a period to pay it, normally 3 to 6 months. Now, HMRC have had a lot of pressure from the government to be particularly lenient on businesses applying for these, but still saying that the same sort of rules apply. You must speak to HMRC, you must still file your VAT return, your PAYE return, or what have you. Be proactive and approach HMRC and talk them through why you can't pay it, how things are going to get better over a period of time. And we always said, if you can pay a small amount up front, you'll get a better deal over a period of time. So if you owe HMRC perhaps £30,000 on a PAYE bill, and you don't think it's the right thing for your business to pay that at the moment, you need to keep cash in the business. If you perhaps offered them £5,000 or £10,000 and paid the rest over 3 months, you'll likely get that through pretty quick. We also know that the universal credit system has been extended to those in self-employment as well. Now, this really is the net to really catch people falling all through the cracks here. So it doesn't provide a great deal of support. But and if you have a quick Google around this, you get very quickly to some very useful government information about how to make your application and what applies to you. But broadly, if you're above 25 and you're a couple, so you're in a household as a couple, that you'll receive around £500 a month, and that gets topped up depending on how many children you have in the family as well. So I think that brings us to the end of our slide deck here. So Rosie, do we want to transition then over to some Q&A?
Yeah, great.
Now, let me just emphasise here as well. Those of you who need to drop off the call now, that's fine. We've got through everything, but we will stick around. Ravi and Rose will stick around for maybe 15 minutes or so, just to answer as many sort of useful and relevant Q&A as we can.
Okay, so we'll start with the question from Elena Lubbock-Shattock. She has two questions. One of them is that she's a food retailer, so she is able to continue trading, but not at the same level as before. Is she eligible for the 10K grant?
Yeah, it looks that the grants aren't dependent on closing down the business. So where you see perhaps like the employees being furloughed, where you have to actually tell people to stop work and you ultimately are closing part of your business, the grants are actually there to support businesses that are still trading. And there doesn't appear, now Ravi, correct me if I'm wrong here, but there doesn't appear to be any sort of qualification criteria that you're even suffering from this now. That we may find as this starts to be executed by the local councils that these tests might be there, but I've not seen anything yet. So if you are continuing to trade, doing takeaway food, and you've been creative as an entrepreneur, how to get that food out there and helping your local community, these grants are available for you, including the rates holiday. That will also be available and applied automatically to your rates bill.
That's exactly what we've been hearing too. Yeah.
Brilliant. And we've got another question from Eleanor saying, I know we had this question the other day as well. If a member of staff is a furloughed worker, but they take a new job, can they still claim this 80%?
No, it doesn't look like you can. So you can't take other employment during furlough.
Okay, great. And then we had a question from Terry McCann. He was asking specifically for the manufacturing business, do the cash grants apply to that sector?
It doesn't look like it unless you claim the small business rates relief or the rural business rates relief. The grants really are targeted at the very vulnerable leisure, retail, etc. sector that have been told by the government to close unless you can do takeaway.
Okay. And then a question from Stevie O'Driscoll on this small limited companies, the sort of group that doesn't have that much support at the moment. He's asking, do you think the government will introduce something there?
Now, I think I've been surprised every week about what the government are doing, what Rishi and his team are doing. And personally, I think they're doing a cracking job of coming up with ideas and ways to deal with an exceptionally complex situation of how to get money to the right people and to get it to them as quick as possible. Now, the government are working on a basis of, we've got to hit the most people that we can in the shortest period, hence why it focuses on employee, because they've got the PAYE system they can disperse money through, and then self-employed. So this then small part at the end of directors in businesses and who are remunerated via small salary and dividends probably only makes up a very small part of our population. So I suspect if the government do something, we're not going to hear about it for a while, and I wouldn't be surprised if this is the part that falls down the crack. But we could be surprised. So I think make other arrangements. Do not assume that you're going to get something. I highly recommend looking at the loan scheme out there and whether you can get an overdraft perhaps in place to tide you through till you can bring up trading the other side.
Okay. And we had a question about furlough workers from Toby Green. Do you still accrue holiday whilst you're on furlough?
Ravi, do you want to pick this up? Because I think you've had this question.
Sure. So I think it's just actually when we touched on furlough workers earlier, this is one of the other key areas of concerns and one of the key things that businesses that we're working with are thinking about. There are a couple of different ways that we're currently looking at it. There isn't a set criteria or a set guideline we have to follow, but we are seeing such options as offering the buying back of holidays, rolling holidays into the following year. But we also we're seeing other businesses out there that are speaking to their staff members and saying, okay, well, we're going to require you to take some level of holiday over the next 2 to 3 months, so that what doesn't happen after when we eventually reach some level of normality, that there is a big flood of staff taking holiday. Mm-hmm. Now, what I would suggest is that this is one of the things that we need to consider in terms of the seasonality of your business. And what we are finding is important is that communicating early with staff members has really allowed us to come to the best solution. because we've been surprised by actually how willing to help and how willing on board some of the staff members are around how they take their holiday in this period and
Okay.
after.
So just to be really clear there is that the information that we've had in speaking to solicitors and HR advisors is that furloughed workers will continue to accrue any holiday entitlement. Okay, so they will do. It's a matter of sort of your contract and employment law. But we suspect there to be potentially something from the government to deal with this, as this is, I think, as most businesses are coming to terms with the idea of, wait a minute, all my employees are cancelling all their holiday over the Easter and looking like the early summer period, what we're going to do at the end of the year. So start to think about that now. And I think as we learn more about the strategies that companies are using, and Ravi referred to a few, buying back holiday, actually creating a more rigid policy around when people are allowed to take holiday, rolling holiday over to the next year, those sort of strategies. But as we become more aware of what businesses are doing, and we see, talk to our lawyers and the rest around what they're advising from an employment law perspective, we'll share that with everyone. And I suspect in the coming week we'll run a session specifically to cover the furloughing of workers, as there's so many bits of advice to come together here, from employment law, HR advice, and then from our perspective as sort of a tax and business advisor.
So John, I know we're doing that separate section on a session on furlough workers, but there is one question here from Lucia Singh, who's saying she hasn't made some of her staff furlough workers, but they are choosing not to come to work. Now, what happens then? Does she pay them, or do they have to apply for support? How does that work?
It's a very contentious area, and if you've kept up watching particularly the government evening briefings, you can see the media absolutely grilling our government around what do we do with these businesses that are forcing people to come to work. So first of all, great that you're not forcing people to come to work. That's definitely the right thing to do. If people are not comfortable coming to their workplace, then and they're not key workers, then that's definitely the right thing to do. Now, in that situation, I recommend that you probably go down the path of furloughing them. So I don't think an employee can furlough themselves. They can request to not be present at work for health and safety reasons, which is clearly what's happening here. But I believe you'll need to take the measures to furlough your workers. And just to be clear on what that process usually looks like. So as Ravi's saying, first of all, you need to communicate with your employees. So what employment rules and legislation is littered about is constantly keeping your employee up to speed about what you're doing and being fair and open and transparent with them. So communicate with your employees, let them know that you intend to furlough them and get them to agree to that concept. If you're going to agree any other payment arrangements through that, then you have to agree that with them as well. And then you have to issue them a letter to formally put them into furlough. And I think we'll probably end up circulating some template documents that we've seen that are quite good on letters, for example, of giving to employees. But it always goes without saying that you try and seek some HR advice before doing any of this, because employment law is a very sensitive area of legislation out there.
Okay, we've got another question about furlough workers. Alan Redman is saying that he paid everyone in March, but then in June, can he backdate that and get the 80% for that month?
Well, if your employees were working during March, they were in the business, operating the business, then you won't be covered for that wages. So you must have furloughed them. However, if your employees were furloughed during that period, so you told them that they were.
Yes, they were.
Okay, so if they were over that period, then the government grant will be backdated to the 1st of March. Okay, so so when I think I said we were expecting payouts towards the end of April, so in April you'd expect to get paid for April and March together.
Okay, great. One more. Toby Green, specific question here. He has 2 companies with separate units in the same location. Would we be entitled to 2 grants?
Good question. I think we've had a few of these in. Now, if they're under the same business, that may not be the case. And I think what we'll start to do as these start being paid out, we'll start seeing how councils are operating this. And now my feeling is if you had two separate units and two separate local authorities, you may end up getting the two grants. But at the moment, I don't know. Ravi, have you experienced any of this yet from your discussions with local council?
So what has been specific is that if you've got if you're within your one business, you've got multiple properties, then it is all housed under one limited company, and that you're only eligible for one. But
right.
what we are, but like you said, in terms of businesses, different businesses but have common ownership, we haven't seen anything that specifically says no. But like you said, we'll see it roll out.
Okay, so perhaps if you've got your businesses operated from different special purpose vehicles, so you have a limited company for one unit, limited company for the other unit, but it's owned by the same shareholders, you may end up getting multiple grants. But I think as we go through April, we'll learn a lot about how the councils are processing these, and it does appear that different authorities are taking different views. So we'll be trying to absorb all that information and then relay that to all of you once we're clear.
Okay, and we've got a question from Alan Bates, quite complicated, so I'll just read it out to you, John. Mm-hmm. Dividends don't count as self-employed earnings, but a self-assessment tax return is required, even if that's your only other income than PAYE. Mm-hmm. And are these taxable even though you have already paid corporation tax on them?
So if you remember, just so a quick aside then, so remember that a dividend income is income that you receive as an individual from a limited company that you own shares in. Now, before a limited company can distribute a dividend, it makes a profit. And on that profit, it pays corporation tax at 19%. And it is that residual after you pay tax that's available for distribution as dividends. That's your retained earnings that's available as dividends. So yes, as a business owner that receives dividends, you receive dividends after corporation tax, and then you pay income tax at the various different 3 levels on your dividend.
Okay, and we have one question that's a bit more of a HR question, but Laura Whitting was saying she heard you say that as a self-employed person you can claim 2 weeks of statutory sick pay. Is this the case? And how would you go around claiming that? Yeah,
so we haven't focused much on that in some of our papers we've rolled out, as statutory sick pay is very low in the UK. What we'll do is we'll circulate a document looking specifically as that, as we haven't spent a lot of time really absorbing all the details there. But I recommend that have a quick Google on that, as well as the government information is extremely good as available at the moment on that. But what has happened is that what's available for employees has been mirrored into self-employment. Okay. So sorry, I can't answer more on that at the moment. We'll circulate something that can answer those questions.
Okay, a question from Kramer Semwell. Will the furloughed workers' wages be processed through payroll in the normal way and filed with HMRC in the normal way?
Really good question. Yes, they will be. So you'll still pay your employees via your PAYE system. So if we run your payroll, we'll still run your payroll for you. So the PAYE that gets deducted and sent to HMRC will still happen. You'll still, as we see it, pay your employers NI, but you're just going to receive a grant from the government that will cover these costs. It will net down to the right level. Okay, but you will still process your employees via payroll in the normal way, issuing them pay slips.
Okay. And I think that's all. There's a couple of other questions, but they're quite specific, so I think we could follow up with them on email afterwards.
Okay, great. Well, thank you very much, everyone.